Good morning, everyone. This is Shauna, the Tax Goddess. Today, I want to talk about you lending your money for free to the federal government. Why? Why are you doing that, Shauna? What do you mean? How are people lending their money for free to the government? So let's back up. What I'm talking about here is withholding and overpayment of estimated taxes. Now, as a business owner, as a self-employed entrepreneur, whatever business type gig thing you're in, you are generally, if you're making a profit, you're required to pay quarterly estimates. And if you have an S Corp or a C Corp, you're also required to pay payroll to yourself, right? Now, one of the things that we see most often is business owners, especially in their first year, 2 years, until they really have a steady stream and they know what their income is and they know what their payment should be, they're just kind of paying in what they guess. And I realize that especially quarterly estimates include the word estimate, but you really want to make sure that when you are preparing these things, that you are in fact preparing them with calculations, with background. How much income did you actually make this quarter? What kind of withholding have you already done on your W-2 if you were an S Corp, C Corp? These are the things that you want to make sure of. Now, how are you lending free money to the government? Throughout the year, if you're doing quarterly estimates and or withholding on a W-2, and you find that you are over withholding when you go to file your tax return, effectively, you've given an interest-free loan to the government for whatever length of time. If that was a year, it could be upwards of 15, 18, 20 months by the time you file your tax return. So would you lend anybody else your money for free? Most people would answer no to that. So today I want to cover a couple of things that you should be checking and making sure that your CPA, your tax preparer, is in fact doing with you to make sure that you are not lending your money for free to the government. So my name is Shauna. If you don't know, I am Shauna, the Tax Goddess. I am in the top 1% in the country for tax strategy. And that's what our firm Tax Goddess focuses on, is tax strategy to reduce your taxes. So today we're going to be covering individual tax withholding. Okay, so that is on the W-2, excuse me, on the W-2 that you are paying yourself if you're an S Corp or a C Corp, or if you're just straight up an employee working for someone else. If your withholding is off, if it's too high or too low, of course, if it's too low, you might owe, but if it's too high, you are giving the government an interest-free loan. Now, there is a really, really cool website that the federal government actually put together. They don't want you to over withhold either, okay? They would much prefer, you pay in what you need to pay in, but that's about it. They really don't want to have extra money sitting around that then they have to refund later. So I wanted to share with you guys this, which is on the IRS's page. And of course, I will give you the link to this page in the show notes for today. But there's actually a tax withholding estimator, all right? And it works, it's a little calculator, so you can just click on the calculator and it will actually ask you questions to help you understand what withholding you should have on your W-2, okay? So are you single? Let's run through this, not all of it. We're gonna run through just some basic questions, but are you single? Do you have a job? Yes, I have a job. I am blind. So you can kind of follow these checklist items and check off what it is. And the calculator is actually pretty accurate. So go IRS, that is a pretty rare thing, but we do love accurate calculations. So if you are a W-2 employee only, this is definitely a tool that I would use. It's very, very handy. Now, the second thing that I want you to be paying attention to is when should you be changing your withholding number? So generally, if you have some sort of life change, so if you got married, if you had a new baby, if you bought a house, if you got divorced, if you adopted a child, if you purchased a home, all of these things are considered significant life changes, and they will impact how much in withholding you should or should not do on a W-2. So I would recommend that you save that link. And again, we'll have it down in the show notes for how to change your withholding if one of those life events happens, okay? Now, once you figure out how much you should be withholding using the calculator, you should be able to submit what's called a W-4 to your employer, and they will be able to change the amount of withholding that you are withholding on your paycheck, okay? Now, quarterly estimates. I want to switch to our business owners here. So our Schedule C's, partnerships, S Corps and C Corps, even though you have wages, you might also have quarterly estimates. Now, question number one is, if you haven't already written a tax plan, call us, write a tax plan, okay? Because we don't want you to have to pay any more money than you need to pay. So step one is use every tax strategy you can to, of course, reduce your taxes, all right? But if we've already used every strategy possible, so at this point you're paying less than 7% tax. I work with Tax Goddess. Our average is 6.92%, which I love. But anyway, so if you're already paying less than 7% in tax, you don't necessarily need another tax plan. What we need to be looking at is now quarterly estimates. So most importantly, what you want to be working with your tax strategist and of course your CPA is, how much in income have I made this past quarter? So quarterly estimates are due April 15th, June 15th, September 15th, and January 15th of the following year for the last quarter of the previous year, okay? So generally with quarterly estimates, what you're looking at doing is looking at the income, looking at the expenses, what are you expecting for the rest of the year, and then calculating how much the tax bill is going to be. Now, this sounds like, well, this could be potentially easy. There's always pitfalls, all right? And this is where we find people have either massively overpaid or massively underpaid. Things like, for example, if your CPA is only looking at your profit and loss statement, but not taking into account the depreciation, that means you could massively overpay because depreciation would give you an extra deduction. So there are definitely items that you want to make sure that your CPA is fully aware of your profit and loss, your balance sheet, any changes that you plan to make. So if you're going to hire another couple of people and that will increase your payroll costs, those kinds of things, you need to make sure that your CPA and of course your tax strategy team know what's going on. So in the meantime, guys, please go double check how much you're withholding and make sure your upcoming quarterly estimates are paid properly, not too much, because the last thing you want to do is give the government interest-free money that is yours and should be in your pocket. And of course, if you don't have a tax strategy to not pay them at all, right, to get your taxes down to that 6.92%, make sure you reach out to our team, taxgoddess.com. That is what we do. As you can see, we've saved hundreds of millions. This number is higher. Keep needing to change that number. But anyway, we save people taxes. We save people taxes. Simple. We help business owners reduce their taxes by implementing tax strategies that will legally and above board utilize every strategy available to you to reduce your final tax burden. So if you have any questions whatsoever, don't hesitate to reach out to us. You can find us at taxgoddess.com and just reach out to the team and I, and we'd be happy to have a discussion and let you know what kinds of options we see for you to help you keep more of your money in your pocket. All right, thanks so much and have a great day, everyone. We'll talk to you later. Bye.